But Gordon's wrong on just about every one of those points. We often criticize what we don't understand. It just makes no sense. There's a cherry picking of data points. To like BYD over Tesla just is confounding to me. Literally, VW has said it takes Tesla 1/3 the amount of time to produce a vehicle than VW. All the car companies are moving to EV. Your economics are going to be better. To like ICE versus EV is to say, I like a 3% grower versus a 50% grower.
In this epic video, Gordon, the class clown Johnson, the genius, Mr. Humiliation Fetish himself, gets completely destroyed on air. It's been a long time coming. Finally, one of the analysts has snapped back at Gordon and called him out on all of his bullshit. This is absolutely delicious, so kick back, relax, grab some popcorn, and enjoy the show. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can get 2 free stocks with WeBull, a free stock with Stake, free Bitcoin with Coinbase, and free Bitcoin with BlockFi, and the BlockFi Bitcoin Rewards credit card. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support.
Crossing over whether you're $1 trillion stock or under that, I think that's relatively, or that's irrelevant here. The company continues to beat. It's turned from really the risky, going from that high price, low volume to the low price, high volume. And now it's a copy repeat with these gigafactories. And there's also the ability for Tesla to follow the path of an Amazon or Apple. A lot of analysts said that, that Amazon was going to be put out of business by Barnes & Noble, or Apple was a one-trick pony with the iPod. And both of those have proved to be much more than that. And I think Tesla, looked through the lens of an energy story, has a lot of potential here too.
I completely agree with everything Jed said there. Now, time to hear a few comments from the class clown before he gets completely destroyed live on air.
Gordon, B10 in the Wall Street Journal, next EV headache, scarce chemicals. Lithium carbonate prices in China have quintupled from a year earlier, and China wants to be the leading EV supplier. There's supply chain issues and a lot of other stuff. There's nickel, all kinds of stuff. Is this factored into your? You think everything's bearish for Tesla, but is this on your radar screen too, Gordon?
Yeah. I just want to take a step back and talk about EVs in general. EV cars on average are $12,000 to $15,000 more than an average ICE car, internal combustion engine. They have roughly half the range, and they're significantly less convenient to fuel when you think about charging stations versus gas stations. So unless one is an enthusiast and or is willing to pay $12,000 to $15,000 more for their automobile from an EV perspective than an ICE perspective, then EV cars are going to remain a niche. Let's look at market share. Globally, EV cars are less than 5% of the global market share. In the US, they're less than 3% of all cars sold.
So there's a couple of things that Gordon said there that I want to quickly address with some facts, the things that don't care about your feelings. First of all, the most recent available data shows that the price of a new vehicle in the United States on average has been over $40,000 for the past year, peaking over $45,000. Okay, keep that number in mind. In a stunning coincidence, Tesla's Model 3 rear-wheel drive, the base model of the Model 3, priced at $44,990. Just sliding in under the average new vehicle price in the US as of September 2021, the most recent available data. To be fair, Gordon referenced EV prices, not the price of Tesla's, and as we know, Tesla's so-called competition is more expensive, does offer inferior performance, isn't up to par, and that's why consumers aren't buying these steaming piles of shit. The rather brain-dead thing that Gordon fails to mention, which leads nicely into the next point, is that as more electric vehicles are produced globally, the cost of the average electric vehicle will continue to fall. It's still an early technology. There still hasn't been much innovation in terms of manufacturing. Battery costs will continue to decline predictably. They're following a declining cost curve. So depending on manufacturer, Tesla versus another company, somewhere in the next 1, 2, 3 years at most, consumers will be able to buy an electric vehicle that outperforms an equivalent ICE vehicle on every metric that matters for a cheaper price than the ICE vehicle. A few years after that, it'll be a significantly cheaper price. And this ties nicely into the next brain-dead point Gordon made about the EV market share as a percent of new vehicles sold. Gordon suggesting that 3% of new vehicles in the United States are electric at this point in time and 5% globally. That's the fucking point, you genius. Consumers want these vehicles. This is evidenced by Tesla's enormous backlog when ordering a vehicle, customers waiting 6+ months. It's inevitable EVs are on the path to becoming 100% of the new vehicle market. The fact that EVs only make up a fraction of the new vehicle market today, and the fact that the technology is now close to price parity and we know it will drop far below the cost of an equivalent ICE vehicle within just a few years' time, meaning it will become a no-brainer for consumers to choose EVs, is an extremely bullish point. Going from 5% to 20% to 50 to 80 to 100% of the new vehicle market, that's the opportunity. That's where the future growth is. Anyway, enough talk from me. Let's hear Gordon continue to self-immolate live on air before getting completely and utterly destroyed by Jed.
Why is that? Well, in the U.S., there aren't significant incentives. In places like Norway, we're talking about the world, and other EU countries, they literally, via the socialist policies, make it 2 times more expensive to buy a car if it's an ICE car versus an EV car. So excluding, significant additional incentives and or penalties from countries to buy ICE cars versus EV cars, they're going to remain a niche. And looking at Tesla, let's talk about Tesla, right? So Tesla is on a 400 volt technology versus everybody else on 800 volt technology, meaning those cars charge quicker. They're more efficient. Tesla's cars, literally the paint comes off in the car wash, and you have panel gaps in the cars that are big enough to watch a movie through.
I wonder how long Gordon spent thinking up that panel gap line. Credit where it's due, pretty funny.
True. Consumer Reports ranked them 27 out of 29 cars, nearly last in quality, and J.D. Power ranked them 30 out of 33, nearly last in quality. There's literally no reason to buy a Tesla now.
Now, Gordon has said a lot of incredibly dumb things in his time. I think this may take the cake for the single dumbest thing this guy has ever vomited live on air. I could literally, see what I did there, name at least 69, maybe up to 420 reasons to buy a Tesla over anything else in the marketplace, ICE or electric. But since I know most people watching will have already heard the spiel, and if not, watch some of my recent videos if you're new here, and I know most of you want to get back to watching Gordon Johnson make a moron of himself, and then get completely destroyed by my new favorite stock analyst, I'm going to shut up and we're going to keep rolling.
There's literally no reason to buy a Tesla now when you have the Kia EV6. You have the Iconic 5, you have the Mercedes EQS. The point is, when competition comes in, like we saw in China, where Tesla's market shares went from 33% to 11%, EU, their market shares went from roughly 33% to 12%. BYD is outselling them 2-1 in China. The VW is outselling them 2-1 in Europe. When competition comes in, Tesla loses. And when you talk about the company, people say, well, it's more than an auto company. 95% of their revenue comes from selling cars. The other 5% comes from a profitless energy division. So when Jed says they're the leader, they're not the leader, and they're trading at 100 times earnings versus the auto industry trading at 7 times. So not only do I think there's risk in EV stocks because the EV space is going to remain a niche, but I think there's risk in Tesla.
There's so much wrong with what we just heard from this intellectual punching bag. Normally, I'd have a ton to say. However, I've got a funny feeling that Jed Dorsheimer is about to set this idiot straight.
Jed, you point out that you think the demand for EV is totally outstripping that for internal combustion. Is Gordon right? If you want to go 500 miles, and most people maybe you buy EV for because you're not going to take it on a long trip. But if you want to go 500 miles, how many times do you have to charge your average EV in 500 miles, Jed?
1.5 times. I mean, but Gordon's wrong on just about every one of those points, except for that of the 800 volts. We agree that, think of voltage as efficiency, and you are seeing a move to higher voltage. But, we often criticize what we don't understand. And the reason that
Holy fuck, dude. Drop the mic. It's over. You're done. Nailed it.
We often criticize what we don't understand. And the reason that that all the car companies are moving to EV is if there's less embodied energy and energy that's used and you're selling at the same price, then your economics are going to be better. And so to like ICE versus EV is to say, I like a 3% grower versus a 50% grower. And it just makes no sense. Further, there's a cherry picking of data points that he's mentioning in terms of Consumer Reports. NHTSA has him as the highest crash and safety rating. To like BYD over Tesla just is confounding to me in terms of that point. And in terms of VW, literally, VW has said that Tesla's takt time is 1/3 that of VW. In other words, it takes Tesla 1/3 the amount of time to produce a vehicle than VW. And it's showing up in the margins, which are far higher than the traditional company.
Brilliant. Round of applause, Jed Dorsheimer. Take a bow. Finally, somebody has smacked this idiot down and put him in his place. I normally have a lot more to say. After all, practically every sentence that comes out of Gordon's mouth relating to Tesla is, wait for it, factually incorrect. But Jed absolutely nailed it, and without being rude, which is not really my style, completely and utterly destroyed Gordon. So there's only two things I'd like to add. One, Tesla stock getting absolutely destroyed at the moment. Bargain of the century. I've said it 1,000 times and I'm going to keep saying it while it's still accurate. The macro environment currently artificially suppressing the price of Tesla stock. I don't have a crystal ball, but if I did, it'd probably be telling me that Tesla stock is literally the best bargain in the entire market as of today. But of course I don't, and it didn't, so just ignore that. And the last thing I want to say is, if you're not already a member on Patreon, you probably should be. Check out the card in the corner or the link in the pinned comment. Sign up, you'll gain access to over 100 exclusive videos, loads of perks, plus my up-to-date Tesla stock price targets, which show how far I think the stock has to go over the next 1 year, all the way out until 2031, featuring a bear case, base case, and bull case. And with that, I'm out of here. And great job, Jed. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can get 2 free stocks with WeBull, a free stock with Stake, free Bitcoin with Coinbase, and free Bitcoin with BlockFi, and the BlockFi Bitcoin Rewards credit card. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. And if you're still watching, you're awesome. I read every single comment on this channel and I really appreciate your feedback. So if you've got any thoughts on today's video, questions, comments, or suggestions for a new video, let me know in the comments below. Check the cards on screen now to browse the merch store, join Patreon, or watch the next video.